What's up, gents? Welcome to a new trade recap, but this is not going to be a normal trade recap, okay? This video is going to cover why a mechanical model can make you profitable way easier than a discretionary model, okay? So why can you succeed way faster as well? Because you are using a mechanical model, okay? So let's get straight into it. Let's start by breaking down the two trades I took yesterday. So yesterday was Tuesday, so let's mark everything out. Let me use a replay tool as well, okay? So, why did it replay all back there? I don't know, but yeah. Okay, so, coming into this day, we had gold being bullish from this break structure right here to the upside. So we are going to look for buys, of course. So, if I'm looking for buys, I'm marking out Asia low right here, and I'm waiting for price to take that out. Now, what you have to pay attention when I break this trade and odd USD, I had a second trade on odd, is how simple the model is, one, and two, how both trades are exactly the same. Both trades are exactly the same. When I say exactly, I mean the exactly same. Okay, so first of all, let's take a look at this one. Okay. So bias was bullish and Asia low was swept there. After the sweep, you have to wait for the first bullish candle, which is this one right here. And now price needs to come back down and fake out, which happens right here. Then we are monitoring most recent fractals, in this case right here, and price, as you can see, broke structure above that. Then this is basically the last step. Now we put the FIB tool from low of the session to the high, and wait for price to retrace back down into our entry. If it extends, we are going to extend as well. And here it retraces back into our entry zone. We put the stop loss at the low and target fixed 3R. And in this case, this trade does lose. Now let's go ahead and do odd USD breakdown. So same thing, we are going to start from 8. That's when I trade Asia Open and New York Open. Now let's take a look. For our time frame, BAS is going to be bullish in this case because we broke structure to the upside from here. This is the most recent break of structure only for our time frame, which means my BAS is going to be bullish, which again, same with gold, means I'm going to look for Asia low. So I'm going to mark that out, and the same thing, we are going to wait for price to take that out, and once it did, like this, now we need to wait for the first bullish candle right here, and that first bullish candle happens there. Now we put the FIB tool, or we look for the fake outs, so that's basically a retrace back down, but we have a way of looking at mechanically. So previous session high to that low, and this is going to be the fake out zone right here, this 0.079 level. So you have to wait for price to come back down into that, which happens right here. So that's the fake out completed. Now we pay attention again to the most recent fractal, which is this one, and wait for price to break above that, which happens right there. Okay, so we now have a break structure to the upside, boom, and now we repeat the same process from low of the session to the high that broke structure, and wait for price to retrace back down into our entry zone, which happens right here, like this. And now all we have to do is put the stop loss in the same way we did with gold, and TP 3R the same with gold. And after that, all we have to do is just let the trade play out the same way we did with gold. Okay, so if you pay close attention, the steps I took to take these two trades were exactly the same with every single thing. Okay, so the bias was the same, the low was swept, the fake out was there, the break structure was there, and the most recent fractal, the fill was there on the same level, the stop loss is on the same level, and the take profit is on the same level. One trade lost, one trade won. Doesn't matter. What do you know with a model like this? So this is a mechanical model, as you can see. And what do we know from there? We know that if it's profitable, which it is, which you can test for yourself in backtesting, because it's a mechanical model, you can backtest it, and it's always going to be the same. What I mean by that is, if you trade discretionary, it's very hard to backtest, because if you backtest now and get good results, and tomorrow you wouldn't take the same trades because it's a discretionary model. So every single trade is going to be slightly different than usually, which then doesn't make it mechanical. So the backtesting data you have collected might actually be wrong to the way you are trading now, because it's always going to be a little bit different fair value gap, different sweep of liquidity, different this, different that, different entry slightly. Whereas with backtesting in mechanical trading, every single trade you take is going to be exactly the same. It's going to be exactly the same as if you traded today. So if we go 2 years from now and we trade TMB Mac, and I go back into 2026 and backtest odd, I'm going to take this trade again in backtesting because it's completely the same. And that's why I want to tell you, boys, that if you do trade mechanically, it's going to be way easier to succeed, because there is not much emotion involved into this right here. There's nothing you can really do about it. It's always the same entry, always the same trade. Doesn't matter if it's going to lose or win, it's still going to be the same trade. So even if you hop on a big losing streak, like I did previously this month, you know inside that there's nothing you can do about it other than just keep executing the model, because the losing streak will end. That's how the market works, and that's how every single model works. If someone is telling you that they have a 90% win rate with 1 to 3, 1 to 4R, that is 100% not true. So there is going to be losing streaks, just depending on the strategy itself. So if you have 50% win rate, obviously you can go on to a losing streak and then a winning streak. Every single strategy works in a way where there's losing streaks and winning streaks. You can't win every trade. That's how trading works. What I'm trying to tell you, boys, is you can make it simple like this and be profitable. It doesn't take too much. I don't know what's up with my throat, but yeah, anyway, doesn't take too much for you to be profitable, because the emotions are not there, because you trade a mechanical model, and then you can't really mess up a mechanical model, and then all it has to do is be profitable. And then you just have to keep executing it every single day and be strong enough. That's the part. It has a little bit psychology, and that is where you have to be strong enough to sustain these losing streaks and keep trading the same model and don't change anything about it. That's what you have to do in order to stay profitable long term, and in order to consistently print, consistently get payouts, and consistently pass accounts. These are some characteristics that will make you profitable if you apply them. If you do a mechanical model and just keep trading it day by day, there's really nothing you can do about it. There's nothing to improve, because the model is like it is, and you backtested it, it's profitable. Nothing really to do other than just execute the model and stay patient. Stay patient within the markets. If it's a slow year in the beginning, the end of the year might be great. So you have to stay patient in the beginning of the year and wait for that come up at the end of the year. So that's just how it works, and there's nothing you can really do about it. And basically, this is all I wanted to go over this for this video. Just how we have one losing trade and one winning trade, and both are exactly the same. And that's how it's gonna be. If I take 5, 6, 7, 8, 9 losses in a row, they're all going to be the same as if I took 5, 6 wins in a row. Nothing will be different within them. It's just the market doing what it wants. There's nothing like you can do to really predict what the market wants to do, and it's gonna do what it wants to do. So you just have to sit there and take your model and then just let it play out, because a single trade doesn't mean it's gonna play out. You never know what's gonna happen. Will the next 5 trades lose or win? Both can happen. You don't know, because the market is what it does, what it wants to do, and there's nothing you can really do about it. So what you can do is act like a profitable trader and just take the same trade every day and repeat that process all over again. Simple.